What if everything you think you know about Wall Street is just a surface-level illusion? What if the stock market, your 401k, even the bank that holds your paycheck, has been quietly rigged in ways you can't even begin to imagine? Welcome to the story of Wall Street's 99% mystery. The hidden financial machinery that siphons wealth from ordinary Americans while the headlines distract you with elections, interest rates, or another market correction. Does that sound familiar? I want you to just take a second. Look at your paycheck. Look at inflation rising faster than your salary. Look at debt climbing while bonuses for executives reach millions. These are not just unfortunate coincidences. What if the real reason that 99% of the country feels financially trapped is because of a secret system that was specifically designed for the 1%? Where are you watching from right now? Drop your city or state in the comments. This is a community check-in because this truth, it affects all of us, no matter what our zip code is. While you hérodontaire, hit that subscribe, because on this channel, don't just skim the surface. We dig into the unfiltered truth, the mechanisms, the history, and the numbers that Wall Street would rather you never, ever know. By the end of this video, you will understand how decades of engineered financial instruments, opaque bets, and shadow banking created a permanent cycle of wealth transfer. And, more importantly, why it hasn't stopped. So let's start with some history, because to understand where we are, you have to understand how we got here. In the 1920s, Wall Street was absolutely booming. People were borrowing money to buy stocks, completely convinced that prices would just always keep rising. Does that sound familiar at all? By 1929, that illusion collapsed, triggering the Great Depression. Banks failed. Jobs disappeared. Life savings completely evaporated. Millions of people felt the consequences. Now, let's fast forward to 2008. The terms changed, but the story didn't. Subprime mortgages, collateralized debt obligations, credit default swaps. The headlines screamed financial crisis, but the underlying mechanism was almost identical: massive leverage, bets that nobody could see, and a small, elite few positioned to profit regardless of the outcome. And it happened even earlier. The 19th century saw financiers like Jay Cooke and the Panic of 1873, where rampant railroad speculation created a cascade of bank failures. The pattern repeats itself over and over and over again. We see the same structural mechanisms, just dressed up in newer, more complicated instruments. It's the same play with different actors. Now, let's consider the hidden stakes. In the 1980s and 90s, the world of derivatives just exploded. And these weren't just simple stock options that you might be familiar with. These were bets on bets, trillions of dollars in value with no centralized oversight, often layered through offshore accounts, and these mysterious entities called shadow banks. Ordinary Americans had absolutely no idea these instruments even existed. Yet, they were exposed to every single one of the consequences: deep recessions, collapsing housing bubbles, and painful inflation spikes. And then came the modern era, and things got even crazier. High-frequency trading, algorithmic derivatives, synthetic collateralized debt obligations. By 2008, estimates suggest that over $600 trillion in derivative contracts were floating in global markets. To put that in perspective, That's more than 8 times the world's entire GDP at the time. This is the hidden engine of the 99% mystery. An entire financial ecosystem built to generate profit for the top percentile while exposing absolutely everyone else to catastrophic, life-altering risk. Even today, the parallels are crystal clear. Inflation is surging, student debt is ballooning, and housing markets are spiraling out of control for the average person. Meanwhile, Wall Street collects its fees, trades billions in these unseen instruments, and quietly moves risk off its balance sheet so nobody can see it. The cycle just never stops. And history shows us every single time this happens. The ordinary investor loses, while the architects of the system walk away with trillions. But here's the twist you really need to understand. This system isn't some accident. It's not a bug. It's a feature. It was engineered, and the architects, they're not just the big banks you see on the news. The real power lies in the shadow banking system, a network of institutions that operate like banks, but without any of the oversight or regulation. We're talking about hedge funds, private equity firms, and off-balance sheet vehicles you've never even heard of. These entities made gigantic bets that were completely invisible to regulators and the public. These bets were often linked together by complex derivatives that could trigger a devastating chain reaction across the entire global economy. The key enabler for all of this was a weapon of financial mass destruction called the credit default swap, or CDS. A CDS is essentially an insurance policy on a bet. But here's the kicker. The same entity could sell a CDS to multiple different buyers, creating exponential exposure without actually holding enough capital to back it all up if things went south. One misstep, one failure, could bring down it almost did. Does this feel familiar? Because it should. And what was the government's response to this self-inflicted crisis? Bailout. Hundreds of billions of your taxpayer dollars were funneled to save the very institutions that the public barely understood, the ones that caused the problem in the first place. And yet, the cycle didn't end. The problem wasn't fixed. In fact, after 2008, the shadow banking system grew even larger. The derivatives became even more opaque, and trillions in hidden risk continued to float around the system, just waiting for the next trigger. So the real question is, who profits from all this chaos? That's where the 99% mystery really comes into focus. Every single time the system resets itself after a collapse, wealth consolidates at the very top. Ordinary workers, savers, retirees, people like you and me, we absorb the losses. The elites, they pocket the gains. It's the greatest wealth transfer in human history, and it happens right under our noses. And what about the scale of this? By 2019, the global derivatives exposure was still hovering around $640 trillion. And the shadow banking sector continues to grow larger and more powerful than ever. The instruments have evolved, the names have changed, but the fundamental principle remains exactly the same: opaque, leveraged bets that ensure the 1% gets richer, while the 99% is left to bear all of the risk. And if you think that's shocking, you won't believe the name of the firm that designed some of the earliest modern CDS networks, or the sheer size of the bets they were holding right before the 2008 crash. The receipt is so much wilder than you think. Ever wonder why it feels like the financial system is a game rigged against you? You're not wrong. Today, we're pulling back the curtain on Wall Street's biggest secret, the one that impacts your savings, your job, and your future. This is the 99% mystery. Let's break it down. Imagine you want to bet on the housing market. You could buy something called a mortgage-backed security, or MBS. It's basically a giant bundle of thousands of mortgages. On paper, it seems safe, right? If a few people can't pay, thousands of others still will. But this is where the game begins. Hedge funds and big banks take these MBS bundles and slice them up into different pieces, or tranches. They sell the high-risk slices to investors looking for a big payday, and the low-risk slices to more cautious ones. But they don't stop there. Next, they create something called a credit default swap, or CDS. Think of it as an insurance policy, but with a sinister twist. They can bet asterisk against asterisk the very same mortgage they just sold you. So, whether homeowners pay their loans or default and lose their homes, the banks can make a profit. They win either way. This isn't just a theory. Remember 2008. The insurance giant AIG sold over $500 billion in these CDS contracts on mortgage-backed securities, all without having enough money to cover the bets if they went bad. And they did go bad. When homeowners started defaulting, the whole system came crashing down. Who paid the price? The US government stepped in with a $182 billion bailout funded by taxpayers. Ordinary people bore the consequences. But these financial weapons of mass destruction go way beyond mortgages. We're talking about interest rate swaps, currency swaps, and commodity derivatives. Each one can be packaged, sold, and leveraged over and over again. It's estimated that a single $10 billion bet can be multiplied 50 times through these layers, creating $500 billion in exposure from just one position. The mechanics are deceptively simple, but the results are deadly. It's like a parasitic engine attached to the real economy. It sucks resources out, pushes all the risk onto the public, and showers profits on the financial architects, leaving everyone else to clean up the wreckage. Sound familiar? It should. Let's look at the 2008 collapse again. Lehman Brothers, a giant investment bank, had over $600 billion in these derivatives hidden off its official balance sheets. When the market turned against them, they had no safety net. They went bankrupt overnight, and the global markets were pushed to the brink of total collapse. Millions of Americans lost their pensions, their jobs, and their homes. The numbers are just staggering. By 2008, global derivatives market $1 trillion. That's not a typo, trillion. And since the year 2000, over 75% of all new financial products created are based on these derivatives. This happens in what's called the shadow banking system, an unregulated financial world whose assets in the US alone exceeded $23 trillion by 2019. But the real cost isn't just in dollars. It's emotional. It's the human toll. This system is fueled by greed, creating instruments so complex that even regulators can't keep up. It's built on an illusion that masks the true risk. And it runs on a principle called moral hazard. The gains are privatized for the few, but the losses are socialized and paid for by the many. Each crisis just sets the stage for the next, bigger trap. And don't think this is all in the past. Look at the parallels today. Student loans, corporate debt, even the bonds that fund our cities and towns are now being packaged and resold in ways that look eerily similar to the mortgage crisis. The risk is being hidden all over again, and the average person has no idea how exposed they are. Yet, the elite continue to profit from the same playbook. Think of it like this. Imagine a casino where the house not only knows every card in the deck, but also gets to rewrite the rules every time you lose. That's the world of derivatives and shadow banking. That's the mystery of the 99%. Every major crash in history 1929, 1987. 2008 shares the same DNA, complex financial instruments, hidden risk, elite profit, and public loss. Each new wave of these instruments is marketed as brilliant innovation, but it's just the same old cycle of risk being repackaged and hidden from view. And the stakes today are higher than ever before. Global finance moves at the speed of light, with trillions of dollars crossing borders in milliseconds. The shadow banking system is more complex, more opaque, and more leveraged than it was in 2008. The next crisis won't just be American-made. It could spread across continents in an instant. Meanwhile, ordinary people remain exposed. Reichen, Kriegsdebt, job instability. These are all direct consequences of a system designed to privatize profit and socialize loss. The cycle just repeats, an engineered collapse, followed by bailouts, and then a massive consolidation of wealth at the very top, and the architects. They just watch, knowing the system is rigged in their favor. The lesson here is simple. Trusting institutions that are built on borrowed time is a dangerous gamble. Ignorance is not bliss. It has a real cost. Understanding these mechanics, the derivatives, the shadow banking, the hidden leverage is the first step toward protecting yourself and your family. So here's your call to action. Question the headlines you read. Question the official narratives you hear on the news. Start talking about these realities with your friends, your family, and your colleagues. Share your skepticism. Educate yourself on how money and power really work in our world. Are we any wiser now, or are we just walking down the same path, wearing slightly better suits? If this video opened your eyes, hit that subscribe button. Drop a comment and tell us where you're watching from, and most importantly, share this information with others. The 99% mystery won't solve itself. We have to do it together. Thanks for watching.